Good day, everyone. Thank you for joining us once again here at See Freedom Brew for our economic briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we want to review over some of the inflation indexes that came out last week. Overall, when we look at the first one here, the Consumer Price Index, as you know, this has steadily come down in terms of the growth rate over the past several months. And we have this steady decline in here, coming down in February, being below that 1.6 at 1.5%. And that's for the all items. For that core number, stripping out the food and energy, we also saw that come down a little bit as well to about a 2.1. When we look at the overall numbers, compared to where the surveys were, we see that we kind of missed the estimate slightly in terms of the all items came in at 1.5 and the survey was at 1.6, so a little lower than the survey. Similarly, when we look at the food, less food and energy, 2.1, expectations came in at 2.2. That's where we have the consumer. So on the consumer side, we continue to see the subdued inflation. Producer price index, well, month over month, we had this final demand picking up slightly, going from a negative, pushing up to about a 0.1% month over month growth. But when we look at the year over year numbers, we kind of see this continuing to come down just below that 0.2 or 2% range for that year over year PPI. And remember, this is the producers' prices that they're paying for their items. So we're seeing that kind of pull off a little bit, showing that moderation continuing to happen in inflation. In terms of the PCE, this is the all-in PCE index this would be for December, still subdued, well below the Fed's expectation, where they want to see that at about 0.165 per month. You see, there is some volatility as we look back through 2017. But when we come here to 2018 at the year end, fairly far below that expectation. We take all that into consideration and we look at the expected inflation numbers. This is the 5-year forward. And we can see at the end of 2018, we had this dip down in expectations. Started to come up a little bit in the beginning of 2019, but still pretty far below where we were basically throughout the first 3 quarters of 2018. So that expectation of inflation has pulled off. And that's kind of weighed in a lot with the expectations of the Fed funds rate. And we see this is this morning's Fed fund probability off of Bloomberg. And interestingly enough, if we look out January of 2020, there is now basically a 40% probability of a rate cut. So we're seeing rates come back down next year in terms of the probabilities. That's a pretty strong probability. And even if you were to look out in September of 2019, that probability of a rate cut is 21.8. So we're starting to see these jump around and increase on those probabilities for rate cuts throughout the next 12 months. So we'll be interested to see where the Fed comes out this week when they release their statement, and they also release their projections for their GDP, inflation, unemployment, and that dot plot this week. So we look forward to reporting on that next week. Have a great week, everyone.